IREN Limited is one of the best performing stocks this year. They're up 478% year to date, or $50 per share. And if you've clicked on this video, you've probably heard of them, and that might be why. So today we're going to look in IREN and their past business strategy and where they are moving to. If you're not already aware, they were a Bitcoin miner and they're now moving into AI infrastructure, and they're going to try and capitalize on that. So a lot of people are excited because they have a good background already and they just need to make a business transition, and it could be very, very profitable for the company. All timestamps will be below, so if you want to skip ahead, do that. Also, before we get started, let me remind you that this is not financial advice. This is just for information purposes only. Please go away and do your own research before investing in this company. I do not currently hold this company, as a disclaimer, but I have been very impressed looking into the company itself. So let's jump straight in the video. So let's take a look at the company and their structure. IREN is an Australian-based data center that is focused on Bitcoin mining and high-performance cloud computing. It owns 100% renewable powered data centers in Texas and Canada, and they have three business sell points. First is Bitcoin mining, second is AI cloud services, which is GPU compute, and third is design/build of AI specialized data centers, and these can be bespoke to the customer. They were founded in 2019 as Iris Energy, and it controls facilities end to end. So this means that they own the land, they own the energy source, and they literally own every aspect of their facilities currently. Also, another bonus with them being built in 2019, a lot of the AI data infrastructure companies that are coming around now have only been around 2-3 years, whereas IREN has a bit of a backing already. It's got good financials behind it, or it's already got cash, instead of constantly financing everything straight away. But we will get onto that later because they still are financing some things. In mid-2025, they had 810 megawatts of operating capacity across 6 sites, and they are well positioned for power-hungry AI and high-powered compute workloads. Next, we'll look at the business strategy, which is obviously key when looking at a company. So historically, they have been a low-cost Bitcoin miner using renewable energy. Renewable energy will be key to their strategy, and they are actively pivoting towards AI infrastructure. This change began in 2024 when they launched AI cloud services. So they were renting out GPU clusters for AI training. They still have that Bitcoin mining capacity and functionality of the business, but they are just tailoring other aspects of the business towards AI data infrastructure. Management has emphasized a next generation data center model. So these are pre-built, grid connected and GPU optimized. So this means from day one of completion, they should be optimized and have enough power to operate straight away. They are a preferred partner with NVIDIA and have financed GPU expansion. So they plan around 10.9k GPUs in British Columbia by the end of the year. So this is important to the strategy. They are financing some of the purchases that they're making, and with the rapid expansion that they are doing with the GPUs, financing is quite key to the model here. CEO Dan Roberts has said IREN's 2.91 gigawatts of secured grid and large land holdings gives it scalability and flexibility. So what this means is they already have secured a lot of power, and they've got a lot of land to keep expanding into and building more infrastructure, and this allows them to scale up quite quickly and be flexible with businesses or their business needs or customers' needs. So that's quite good. And their growth plan is to transition from asset heavy crypto mining to high margin AI cloud services. Also, I want to give a quick shout out to the Discord community, which is One Big Germany, which has been set up by Ben's Finance and Jay's Finance. And it is a great community where this stock has been highlighted many a times, and everyone is sharing their due diligence. So if you want to join the community now where everyone shares all the news and all the research, scan this QR code here and it'll cost you 18 pence a day to get access to loads and loads of information that you might miss. Next, we're going to take a look at their data assets and renewable energy. So all of their facilities so far are built on low cost renewable power, and there's no hint that this strategy is going to be moving away from.
The low cost renewable power is quite key, because whilst a lot of other people will be battling raising energy costs, IREN are able to keep these costs low with renewable energy. All of their British Columbia sites are powered 100% renewable, with 98% being hydroelectricity, and this information can be found in the latest 10K form that they have submitted. This is quite key because I think hydroelectricity is one of the cheapest renewable energy forms, so that's quite impressive. And then they get the other 2% from the likes of solar, wind, and off the top of my head, I don't really know what else is out there for renewable energy. So sites wise, I've got 3 in Texas, which have a total capacity of 2,750 megawatts, and then they've got 3 in British Columbia that only has a total of 160 megawatts of power. So in total, they house 2.91 gigawatts across 2,000 acres of land. So if we focus more now on the AI infrastructure expansion and how they are going to achieve that, in July 2025 they announced that they were buying 2,400 Blackwell chips from Nvidia for roughly $130 million. So this will double their GPU count to 4,300 of the Blackwell chips. And then in August they financed a further 2,400 GPUs with a $96 million lease. And then by the end of 2025, they should have 10.9K GPUs installed. This is quite key because this is going to help them stay on track to achieve 500 million in annualized run rate revenue from 23,000 GPUs by the end of Q1 2026. So there is further installs to go, but the plan for the rest of the year should help them achieve this by the end of the first quarter in 2026, which is quite impressive. Obviously, that is a lot of money coming in from the AI data center, and this will help prop up the other aspects of the business, which is Bitcoin. But we'll get on that later in terms of what Bitcoin means for the business and if it's a risk or if it's still going to be a profitable play for them. Texas itself has capacity for over 100,000 GPUs, so they've got a lot more room to expand in there when and where needed. And the expansion plan is financed by cash and vendor financing, so they are taking on some debt to aid this expansion. But like I said in the Nebius deep dive video, which I will link here now, if you know how the company is using debt, it's not always a bad thing, and in this case they're using debt to aid expansion, and as long as they see a return on that capital employed and they start snapping up customers quite quickly, the debt isn't too bad because they should be able to pay back comfortably. But you've always got to be aware when a company is taking on debt and if they are using it for good expansion or if it's bad debt. Bad debt could be used to pay off other debt or a plan that you don't think is going to actually pay off. So really, if you are investing in a company with debt, know what that debt is for. And this discussion of debt leads nicely onto the next topic, which is financial performance. So for the financial year 2025, they recorded a revenue of $501 million. So this was a record revenue and was up by 168%. This has been driven by higher Bitcoin prices and growing AI revenue. So as I mentioned earlier, the Bitcoin side of the business is still profitable and they will still see gains on that. But historically, where they would have been more vulnerable to the Bitcoin volatility, with this growing AI revenue and opportunity, they can really stabilize the finances a lot better going forward and have more predictable earnings. Net income for the end of the year was also reported at $86.9 million versus minus $28.9 million. So that shows how AI is possibly helping them get into positive figures. And adjusted EBITDA was $269.7 million for the same period. They ended the financial year with $564 million in cash, which they will be using for expansion alongside financing and debt, which, as I've just covered, they carry a lot of debt and financing obligations, so they need to make sure that they are bringing in the revenue to pay those obligations, otherwise it could turn into a massive massive mess. Another key thing to note here is their next earnings are on the 6th of November. So if you want me to cover that, leave a comment below, and we'll be able to really see how well the AI side of the business is doing after another quarter, and really paint a picture of how it's transforming the business's financials and what to expect going forward. And what helps their financial performance is what we're going to discuss next, which is key contracts and partnerships. So on their AI cloud service agreements in October 2025, they announced additional multi-year contracts with major AI firms for Blackwell GPUs. Now in the article, they didn't state who these multi-year contracts were for, so if you do have any information, please leave that below, because I couldn't find that. But this locks in service revenue ahead of delivery, with roughly 11,000 GPUs contracted for 2025, which implies a revenue of $225 million based on their margins. In terms of partnerships, they signed an NVIDIA preferred partnership deal. This is a bit like Nebius. So really this means they're higher in the pecking order for the delivery of the GPUs. So that's always a good thing, especially with the expansion. They're going to need that access when they need it. And then another key contract that we need to look at, which was different from Nebius, is their power agreements. So they signed a 600 megawatt grid connection for their Streetwater 2 project, which is in Texas. So this secures power capacity for data center hub by 2027, which is important because if they keep expanding, they're going to keep eating up power. They need to make sure they've got that power in advance, otherwise they're going to really struggle to meet the demand of the customers. But buys of power have been curtailed by solar/wind power in Texas to try and minimize those energy costs overall, which is obviously quite positive. The more they can lower the costs or minimize the costs, the more profit they're going to be making. And to understand truly the potential that IREN has, we need to look at the market environment and growth prospects. So AI and data center demand is growing at double-digit rates yearly. And then I've got 3 predictions from experts here. So Goldman Sachs have predicted that global data center power capacity will reach around 92 gigawatts by 2027, which is roughly 17% compounded annual growth. McKinsey estimates roughly $6.7 trillion of data center investment is needed by 2030. And if it's needed and IREN are the ones doing it, that's amazing, because companies are going to start needing more access to AI infrastructure. And then Omdia has said that the AI data center chip market will grow from 123 billion in 2024 to 268 billion by 2030. So they're expecting it to double over the next 5 years. Yeah, 5 years. So all 3 experts here imply sustained demand for IREN's core services. So this is more bullish for IREN really. If all the experts expect this market to keep growing and the demand to keep growing with it and the need for it, then this is really good for what IREN can offer the market. In terms of the Bitcoin market, the market is mature and cyclical. It goes around in cycles, and the profit really depends on the Bitcoin price and block rewards, which halves every 4 years, and I believe the last halving cycle was last year. So theoretically it is harder to mine Bitcoin because there is less available, which is normally why the Bitcoin price goes up every 4 years, I believe. Please correct me if I'm wrong, because I'm not into crypto, but this is what I've been told. So yeah, really going forward, it should be harder to mine Bitcoin, which could mean less profit because they're getting less. But if the price keeps going up, and it might stay in tandem with it, but you don't know. We don't know what's going to happen. We can't predict the future. And IREN is one of the world's largest miners of Bitcoin. So really, that side of the business, they are taking on quite a lot of the Bitcoin that's out there and available. But because of that, they've also got the massive infrastructure readily available to make that transition from Bitcoin mining to AI infrastructure. The final thing we need to look at are the risks associated with investing in IREN. Like any company you're going to invest in, there is going to be risks, whether that is specific risks to the company or risks to the overall market. So the first risk is execution risk. The The strategy really hinges on large capital outlays, so they must deliver capacity and complete builds. Any delays could slow revenue or cause customers to go elsewhere and lose revenue altogether. The second risk is customer concentration. IREN have said themselves the failure to build a broad customer base and diversify workloads could impact recurring revenue. Obviously, you don't want your concentration to all be in one place. Normally, like the saying says, you don't want too many eggs in one basket. So yeah, they really need to make sure that is broad and caters to a large variety of businesses. So if one sector or market is struggling, the rest of the business or the whole of the business in that aspect isn't struggling with it. The third risk to look at is supply risk. So obviously they rely heavily on Nvidia for GPUs, and in the past there has been historical compute shortage. So any supply issues or price spikes in electricity could raise costs. Obviously AI data infrastructure eats electricity, so really anyone in the market is susceptible to increased energy costs, and they are also susceptible to that supply chain risk, especially if they're all getting them from Nvidia. The fourth risk to consider is competition. Other crypto miners are pursuing AI data centers, for example TeraWulf. Now I've not looked into them deeply as much as I've looked in IREN or Nebius, but I know they are also doing that, so that is quite interesting. But IREN competes on power costs, scale and green credentials. Green credentials is very important, and I will get onto that next. But also rapid tech changes could disrupt the plan or disrupt their ability to keep up with the market, especially with the heavy capital costs they're incurring. It's not that easy to just switch straight away. And then the last risk to consider is regulatory/energy factors. So energy and crypto policies may affect profitability, but the global focus really is on green energy and using renewable sources of energy to benefit the world more. And with IREN's renewable model, this means they could win a lot more contracts if companies solely look at the renewable energy aspect and say that as a big part of the contract that they need for their company's sustainability. And that is it on my deep dive for IREN. If I have missed anything important, please put it in the comments below and let me know what you think of IREN as a stock. I think it definitely has a lot of potential. I am going to keep watching it. I think I'm going to wait till the next earnings to really see how that data AI expansion is going. But yeah, I think it's a very solid business. Please do your own research before investing. Leave a like if you have enjoyed this video or learned something from it. Subscribe for more videos like this, and I will see you in the next one.